Good morning, everybody. Happy Monday. It is Monday, June 16th. Happy, slightly belated Father's Day to all you dads out there. Hans, Andrew, I hope you guys had a wonderful day with your families. And welcome to the Ticker Highlight Show. Reminder, we meet every week, and the four of us are going to give you our best ideas, and then we will pick a stock. We closed out Occidental Petroleum this morning at $3. Nice little win there. If you look at the Ticker Highlight Show portfolio, we have not had a loser since April 21st. So going on 2 months. So today in the show, I'm going to give you guys a brief rundown of what I'm watching and why you need to use this one asset as kind of your gauge of where the market is going. Then we're going to go around the horn and hear from each of our traders here, Alicia, Hans, and Andrew T, about what they are looking at and what their picks are. Then we'll grab a stock and trade it. So with that, let's dig in. So I am not a Middle Eastern policy Middle Eastern policy expert. I don't play one on TV. But what I am is somebody who's traded for a very long time. And as traders, we hone in on what is kind of the driver of the market. Back in April when things were blowing up, what was the number one thing I was watching? I was watching the bond market. Why? Because the bond market was really telling us what was going on. As things have progressed, I've moved into what is the Russell 2000 doing? What is the VIX doing? What is gold doing? Right now, if you want to know where the market is going, if you want to share my screen, there is a very clear answer, and it is crude oil. WTI, Brent, either of those. They are an excellent vehicle for evaluating risk on, risk off relative to the conflict that is currently going on in the Middle East between Israel and Iran. As you can see, we're going to hone in here. Oil was already on the rally as tensions were heating up. Friday, oil jumped. This is USO, which is the fund that tracks WTI. USO had jumped from 75 over 80. Today, it has given up about half of those gains. On the low, it almost was closing the gap. Didn't quite get there, but appears to be softening. So it shouldn't be a surprise on Friday. Oil explodes higher. And what happens to the S&P 500? The S&P 500 takes a dive. Here we are. We're up nicely on Monday. And what is oil doing? Oil is taking it on the chin. Right now, oil is your leading indicator for where the market is going. And that's going to probably be there for the next day or two, but it can shift at any point in time. There is kind of a lead asset class, and your asset class that is telling the market what to do. Right now, that is oil. I would not be surprised if things calm down a little bit, if that flips into being gold related, or even as we head into the Super AI conference on Thursday, whether it starts being these AI generated names. So it could be a ETF like an ARK that could start leading us. You have to be kind of following along these major indicators. It's why I have so many tickers on my desk, and why I'm always trying to find, okay, what is dictating to the market how it should behave. So you're going to want to stay tuned all week during our State of the Market, as something we'll be addressing is, hey, what are you needing to pay attention to right now? All right. Now, today, I'm telling you, it is energy. It is oil. It is oil and gas. CIA reports. I'm not an expert on any of those, but nothing out of oil's move has anything to do with supply and demand and all geopolitical risk. And the geopolitical risk in the Middle East is remains hot. Oil's going to be your leader. I'm getting very good at saying a Texas oil, Andrew. Because it in Chicago we'd say oil. Down here it's oil. And
we got some oil.
Yeah, and so I'm getting good. Right now, oil is going to be your leading indicator. All right, and but that will move as this war, this conflict matures and or resolves itself. All right, so with that, let's start bringing it around the horn. I want to start with our own Queen of the Candles, our chart expert, the Duchess of the Doji. She is Alicia J. Leslie. Her pitchforks have really, in my changed the way I trade and have provided really good guidance to how we're moving and where we could go. Alicia, do you mind sharing your forks on crude before you dig into the names you like and dislike?
Of course. Good morning, everyone. Let me add my. There we go. Wait.
Good morning, Alicia.
Hi. Can you see my screen?
No. I see live vol, not pitchforks.
Yeah, we got to switch in and out.
There we go. Crude was very interesting. It traded right to my resistance and rolled over. Check it out. I told everyone, watch 77.37. It traded there twice and rolled lower. Today's very bearish. And like you say, Mark, that's probably a very important key indicator of the whole risk on, risk off with the conflict, right?
Absolutely.
So until we get a close over that 77.37, which could take us up here, 93.40. Actually, it would stop here first, 87.25. We could just wallow here, right? Or pull back down to 65.25. So bearish candle today. Watch how we close. I would not go long again until it closes over 77.37. Personally.
There you have it. But if it breaks over there, then there's real upside. And so it's worth being patient is what you're telling us.
Yes.
Because we get that clean break, you've got a real opportunity to go long.
Yes. Definitely. $6 higher from there. Now,
you had a couple of stocks, one that you loved, one that you hated. Now, one of these we actually closed we closed this morning, and we're going to be looking for re-entry. So why don't you shoot us with what stocks you're watching?
So I chose Oxy when it was down here. It gapped up. Now, the rule with the gap is 2 to 3 days maintaining that gap level, you should continue higher. And the direction that that it's been moving, the trend. You'll see some resistance at the 200-day, 47.85. Above there, my median, 49.71. These previous highs will be some resistance. It lines up really well with my median line here. Again, if you see this begin to close the gap, I would wait to hop in again. So
I'm wondering how that 77.37 and kind of when to jump back in Oxy kind of align. And I'm going to guess that Oxy breaking the highs is going to align pretty darn close with break-in 77.37, and that's going to be your signal to get it long. And that could be a very good vehicle to express what you're showing us in crude without having to be a futures trader.
For sure. Oxy, Haley, Chevron, XOM, XOP, XLE, all of them. XOP it is up against this resistance, but you begin to trade over that, you have room to run. 142.38. But again, watch the futures. Watch the crude futures. The firm was my sell stock of the week, and it has already hit my target almost perfectly, actually. I said 58. I think I said 58 and a little bit of change. It traded 58.53. Now it's bouncing from the median line, so it's no longer my hated stock. So that has worked its way out. I hope people, actually, someone told me they traded both Oxy and Affirm.
Yes, we do this ticker highlight show every Monday, but part of the fulfillment for this ticker highlight show is you get an email from each of us explaining what we see in the market, what we like, and what we dislike. And so if you're saying, boy, I wish I would have known about Leisha's hate of Affirm and love of Oxy so I could take advantage of it, you absolutely could have. All you have to do is open your email that says, the pit report, and you can read exactly where Leisha sees her stocks moving those days. And it is a real opportunity for you to take advantage of her trade idea if it comes to fruition before we meet here on Mondays. So that is why you should be opening and reading everything we send you, because it is packed with actionable ideas.
That's so true. I called, I think it was this day, because I had gotten my confirmation. Affirm traded to the top of the pitchfork. Nice shooting star change in trend candle. Confirmation the next day. And sure enough, I said 58.64 and it traded 58.53 before bouncing. So that was a good.
It was a great trade.
Yeah.
Wish I'd have jumped on board. Speaking of being on board, let's bring in our own Andrew T. Giovinazzi, the Viking of Volatility. And let's circle up with his picks. He's looking at, I believe, a fruit vendor, and then he's looking at a payment processor. So, Andrew, and we can share my screen.
You need to share, Andrew. Oh, you want to share yours, Mark?
We can just do mine.
Okay. All right.
That way Andrew doesn't have to do anything. And Andrew's starting out by looking at Apple. I jokingly call it a fruit company. We all know Apple makes phones. But Andrew, you are off the Apple bandwagon. You're off the Apple cart, if you will.
Yeah. When I wrote this Wednesday, I believe. And I thought Apple's going to break 200, and it did. And it's trying to get back, but I don't think it has a lot of oomph. What I was saying about Apple, two things that I didn't like. One is, we've talked about this many times, you and I, Mark, there's very low growth in sales. The multiple is really high, and it made a peak in December and really hasn't gotten anywhere. And I just think money is leaving Apple to go other places. So, today I still don't like it. It's not a stock I would buy anymore. And it still looks bad. And one more thing I thought when I was looking at it was I thought option prices felt or looked still kind of high. Like a lot of the market has kind of come back, and Apple volatility still in like the 30s. It feels like it could be a little, lows of volatility in December were like below 20, and I'm still seeing like high 20s. The back month volatilities are still relatively high. So it's for a stock that has been consolidating as much as it has. Vols are, I think, a little high, and I think people are buying protection stuff like that. So that was one, and I still don't like it.
Yeah, I mean, I think the thing is here, we saw a lot of money leave the market in April, and a lot of that capital has been redeployed. However, this time it didn't redeploy back into Apple, which is kind of interesting. It's going in places where it sees growth. they're using this as an opportunity. I mean, you're never going to lose your shirt owning Apple. I think traders just need to reset their expectations of what Apple is. It is a completely mature company at this point, unless they start innovating again, which they have kind of stopped. So think about it as the same excitement you buy Apple is the same excitement that I have when I buy a utility or an Exxon or a Procter and Gamble or something along that. It almost needs to fall in consumer. I'd almost put it in consumer non-discretionary with where phones fall, as opposed to consumer discretionary.
And there's a question. I would like to see the volatilities drop below 20 again.
Before you go long, like start buying options.
All of a sudden, it's like the stock has gotten to a point where, people are writing calls again and things like that. The higher vol, I think there's a lot of, I don't think there's as much retail interest or even institutional interest in selling vol. I mean, if it's still in the high 20s, that means institutions really aren't selling options right now. So there's not a lot of comfort level in there.
Yeah, and you can see relative to where it was in the past, we're currently, while Apple prices are lower now, if you look historically from the
it would be high.
Yeah, we'd be very high from where we were through most of 2024. Yeah. Now, Andrew, what was the name that you liked?
This is a stock I own. I've owned it in Flash 10. It has been as high as $99 over the last year. It is the Blockhead XYZ, formerly Square. I like this. Now, I love these two charts in comparison, Mark. You did a good job of that. Look at how dang cheap that implied vol is for Square. They're like giving it away. Like the stock ain't ever going to move again. I love seeing that low vol in a stock that is starting to come out of the bottom. So, and remember, a lot of the payment processors and a lot of companies, really terrible guidance at the beginning of the year, right? Hans, everybody's like, oh, we don't know what's going on, the tariffs of this. A lot of and Block was one of them. They also do participate in the Bitcoin noise to some degree. So literally probably the cheapest options out there. So I like this one. I own a good number of shares of this. I traded option trades in and out. Flash 10, we have traded multiple times in Ripzone when it used to be Trading Desk. And it's a fun stock to trade. And it's probably one of the cheaper payment processing names out there. So I think for exactly the opposite reason that Apple vol's so high and that people are not quite seeing what's going on, or there's a lot of murkiness around Apple. I like XYZ.
And Andrew,
Hannah, it should be, sorry,
Andrew,
it's
talking,
XYZ, not Oxy. I might have said Oxy, but I meant XYZ.
Andrew, talking option fingerprints. Now, I know you like longer dated stuff, and I like shorter dated stuff. And I would note that on a day it's up a couple of bucks. Traders have bought, expiring this Friday, over 22,000 June 67 calls.
Price right.
That is, they're paying about 20 cents, betting the stock can get like a 5% rally, which I don't think is asking too much.
No.
It's up about $2 today, trading 63.68. But yeah, they are jumping over the 67 calls. And then outside of that, that is the major driver of volume today. So think about it this way. Today, we're 51 minutes into the trading day, and 27,269 calls have traded. Over 22,000 of those are on the June 67s expiring on Friday.
This is where I would like Leisha to tell me a nice target for XYZ over the next 2 weeks. This is the part of the program where the pitchforks, I like helping. I like that look.
All right.
Pitch me a pitchfork. Pitch me a pitchfork.
Yeah, Leisha,
There we
I'm
go.
really interested in this XYZ one. So I want to hear from Hans, but I'm going to ask you when we circle back to pull up XYZ on a chart here, if you can put one together in the next couple of minutes. Because given Andrew's like the low volatility and the interest in coming from short dated options, you know, I've got an eyebrow raise. Let's just put it that way.
Ooh,
So
we got an eyebrow.
I do.
Uh-oh. Like The Rock. You look like The Rock when he was a wrestler.
Yeah, there you go. Except when I raise my eyebrow, it's not to betray Farouk. It is to bring in our own Hans Albrecht to discuss his names and how he's trading. Hans, you've got the big Super AI event that I know you're watching very closely for later in the week that you're going to be trading around. But what are you looking at today?
Yeah, I'm watching that stuff very closely, Mark. This is an area I've been covering for about 9 years now. You know, I spearheaded the Industry 4.0. That's what they used to call it, the new industrial revolution of big data and robotics and all that stuff. So watching it very, very carefully, and I'm getting very, very excited as Turbo Income members know. I can't stop talking about it, but I think that overall the market, I'll just make this fairly brief, but overall the market is really kind of about different cross currents. I think we've got this battle of flows, which I talk about, which is, you know, no one's, you know, retail got in and the rest of the world didn't. Well, we're starting to see that actually repair itself. We've seen a lot of hedge fund flows come back into the market. So we maybe don't have some of the tailwinds from flows as much anymore. I would say, you know, I've been saying that for weeks now, and we're kind of getting to that point where people are kind of getting back in. So the other thing is the battle of reality, right? We've got war. Iran saying they're going to pull out of the the nuclear proliferation treaty. I don't know if that's even important. They probably don't even have a program anymore, so probably not a big deal. But you know, things are continuing and things are kind of escalating. And I didn't think they would. I think things would go quiet. Like, remember last year or was it last year? And things just kind of went quiet. They kind of lobbed a few missiles and went, okay, let's call it a day. So things are escalating a little bit. And then I think that last battle, which I think is winning out for markets, is really AI. And this ties into my event that's coming up and the absolute excitement that I have around this next leg of AI, which I see as going from kind of this training phase, which is training is like, you know, I feed AI a million pictures of a cat, to inference, which is the AI going, you showed a picture of a cat and it goes, yeah, that's a cat. I'm pretty sure that's a cat. So this is a new phase that requires a lot more power, a lot more compute. It requires the best GPUs. It requires data centers. It requires so much stuff. You can't even wrap your head around it. And I actually think it's quite underhyped. So along those lines, my bullish pick today is Palantir. And I know this isn't an inexpensive stock, but the way I want people to think of this is that, first of all, it's volatile. So it can move around. But this is a company that is going to address a pain point for many, many different companies and CEOs. Companies that are going, have you heard about AI, what it's starting to do? Have you heard about Buddy down the road, or a competitor, what they're starting to do? Palantir comes in with theirs. They have a special basically kind of, you could almost think of it as a sort of operating system. Think of them as a kind of a Microsoft, kind of almost like a browser that you put on top of your company, and it starts to immediately give you results. So this is a solutions company. It's not we'll take a look at things. It will literally come in and do stuff for you. So I think the runway is very, very long for a company like this. And there are a couple other ones that I'm going to divulge when the time comes, that are going to really do some of the same sorts of things, which is bring the data and everything a company is doing and grab insight and turn that into monetization, which is this next big phase. It's monetization. So in Turbo Income, we've been focusing on SOX, the SOXX. We've been focusing on Qualcomm, focusing on areas that look good. Apple's kind of interesting. That's AI at the edge, right? It's AI in your pocket. We'll see if they can kind of figure that out. I'm watching carefully there. But lots of amazing ways that you can play this next phase. And I think people are really underestimating it. So Palantir, really an interesting way to kind of play that scaling. I think the phones are going to be ringing off the hook, right? I think they're not going to have enough people to basically handle the business. So the pick that I don't like is, again, sort of related to last week or the week before, Duolingo, right? So I think there are certain companies that are going to be threatened significantly by AI. And Duolingo is amazing. My kids use it. It sort of revolutionized language learning, all these kind of lessons, these games that they've created, all this stuff. But the problem is AI is starting to do many of those things. It's starting to be a tutor. It's starting to be a therapist. It's starting to be, my wife's in nutrition. She's like, man, AI is going to cut into my business. This thing is going to start giving me what to eat, how to work out. And it knows you, it knows you personally. If you pay for certain packages. So Duolingo, I think, is difficult. I think it's along the same lines of like, the Upwork that I mentioned the other week. And there's another one in there as well that I've been buying puts on. So those are my two good and bad picks.
All right. So, Hans, I really liked your Duolingo idea. It's a $500 stock. Options are really expensive. So, I mean, that's going to be a little outside of our thing. And I like the Palantir idea, but I don't want to, I know that you've got your big AI stuff, so I don't want to front run your AI thing. So, and Leisha, I love Oxy, but again, we're waiting. And as soon as if oil crosses that level, we're going to want to jump in. We literally closed Oxy this morning at $3. Nice little win from our trade a couple of weeks ago. So I want to look at Block XYZ. It's got the option fingerprints. It's got the low volatility. And if Leisha can tell me she likes the chart, this is like the triple crown winner of names that we're going to want to be involved in. So, Leisha, do you want to kind of share what you're looking at?
Sure. Let me switch screens here. Oh, someone else is doing it. Here we go. Yes. XYZ, little pullback. The support of the 21-day held, it bounced, which kind of is just right around our median line. Really nice inverted hammer with confirmation today, closing that little mini gap. I wouldn't be concerned though. That's kind of a mini gap. Let's see what it is. 63.31. Yeah, it's 31 cents, 32 cents.
Right
Not
off the 21 day.
Just a common gap. Yeah, this is bullish to me to at least come back up here, 65.82, 66.36, and to follow the channel. Yeah. 68.60. I'd say bullish chart for sure.
So looking at the option prices, by my interpretation, I think the cheapest options that I can get my hands on are going to be for about 3 weeks from now. That's July 3rd. With how much this stock is moving, it's moving almost $2 a day. So, this yellow line represents ATR, that's average true range. The stock is moving $1.93 a day. The implied volatility is at levels that when it gets here, option prices go up. And the correlation between option prices going up and this stock rallying is actually pretty high. Now, option prices can obviously go up when the stock is dropping, but generally speaking, when you get these low option prices and then you start seeing things rally, the stock rally, that can be pretty nicely bullish. No earnings to worry about, no major headwinds. I like Andrew's pick. I like Leisha's chart. I want to buy the July 3rd. So these are July 3rd. I want to buy the 65 calls. Right now, the market is 166 at 174. So they're worth about $1.70. I don't want to pay more than the offer price, which is $1.74. This is a relatively liquid name, so it should not be too hard to get in. But I want to pay less than $1.75 for the July 65 calls. My target 65.58 in the stock, as Leisha, that was the level you said, right? 65.58. My target is 65.58. So up about $1.60 from here. I definitely want to start taking some dollars. And but with them trading these, and my gosh, 25,000 of these calls now, Andrew. And now I think ultimately they're hunting a little over $67. So I may hang on to one or two to see if this thing can really catch a head of steam. But 65.58 up to $66. That's the level where I definitely want to start taking some dollars. My downside, Alicia, what's my push the exit button? I think it's looked relatively tight. It's that 21 day.
Yeah, I would use a close below the 21 day on as stop loss.
And that's going to be right now about 61.68. So about $2.30 lower. So this stock will move $2 a day. Means that we could be down and then up. I mean, it's going to have a little bit more teeth to it. So you're going to have to, if you own this, we might be timing this really well and just go up for 3 days straight. But it's also possible that this thing is down $2 tomorrow and then rallies $4, $5 toward the end of the week. That is what you're getting into when you are trading a more volatile name. So again, I am buying the July 3rd, 65 calls in XYZ, possibly the worst ticker symbol ever. Ruined millions of academic studies because when we were always using examples, we would use XYZ. I mean,
why
the
did
amount of
MIC let them do that? So annoying.
The amount of PowerPoints I have written that say, imagine stock XYZ has a strike price of 50. 1,000 times I've written some example using XYZ stock, and now I can't use it anymore. So thanks a lot, Jack. So let's add this one in. We are buying XYZ. I want to pay less than 175. Let's see, trader ID 18. And we are going to buy to open XYZ July 3rd, 2025, 65 calls for less than $1.75. I'm going to be targeting $3 on $3. Start taking some dollars here. And if you go to our portfolio, this is now published. The only other stocks trade we currently have on in this portfolio is Peloton, which is a nice little squeezy name. And I think those August calls are going to work. They're long. Traders are long a bunch of those. All right, everybody. So there you have it. We are buying XYZ July 3rd, 65 calls for less than $1.75, targeting 65.58. Our downside stop is a close below the 21-day moving average. And I want to remind you guys that you got to be watching oil. That is currently our leading indicator, and make sure you're back with us every single day because this leading indicator is going to change. The catalysts for the market are going to change as this conflict develops. So for Hans Albrecht, our Imperial Overlord of Income, and Andrew T. Giovinazzi, our Viking of Volatility, and of course, the Queen of the Candles, I just call her Queen, Alicia J. Leslie. I'm Mark Sebastian. I am your only option, and I hope you have a great trading week. Have a good one.
Have a good one, everybody.